Welcome back to our accounting class, and we are continuing our topic of published accounts. In our previous video, we would have part one of this question, which is called Tuff Tank Incorporated, our example question. We would have looked at how to calculate the turnover for our income statement, and then we would have looked at how to calculate the cost of sales for our income statement, because we are preparing our financial statements in a format suitable for publication. So now at this stage, what we will be looking at is how we are going to calculate our administrative expenses. Now remember, from our previous video, we would have stated that our administrative expenses are the expenses that the organization incurs, but not directly tied to a specific function, and they're not tied to things such as manufacturing, production, or sales. And these expenses are usually related to the organization as a whole, as opposed to an individual department. So these administration expenses that I'm going to calculate are not like related to, say, research and development department or the sales department. They're related to the entire organization or entire company, and they're usually fixed in nature. And these particular expenses will exist regardless of the level of sales that we would have earned during this financial year. So whether or not we would have earned $155,220 in sales or not, we would have still incurred these administrative expenses. So let's go to our note 3, and this is our administrative or administration expenses. And we are going to start by looking at our depreciation. I think that's the first one I may look at. Let's go back to the question and see what are some of our administrative expenses. So when we go back to our trial balance, and I go to the very beginning, we see that we have land, but that is not depreciating. We have delivery. When we look at our non-current assets, we have delivery vehicles, and we have office machinery. We also have, because this is delivery vehicles, this is not an administrative expense, but it's associated with sales because you want to deliver the items to the customer. So this is not an admin expense. This does not relate to admin. The depreciation on the delivery vehicles does not relate to administration. However, we have office machinery where the staff is using inside of the office. So this office machinery would be related to the administration. So we will have to calculate depreciation on the office machinery. When we come down, the next one we have is office expenses. So that will also be dealt with respect to administration. We have salaries and wages. But let's see what they say to us with respect to salary and wages. It was stated in the additional information that half of the salaries and wages was paid to the delivery crew, and the remaining half was paid to the office staff. So therefore, we have to take that salary and wages figure and divide it between the delivery crew and the office staff. So we have some admin salary and wages expenses. We also need to look at, we have our admin. Next thing we thought about here is allowance for doubtful debt, and deciding to give make a provision or an allowance for doubtful debt. This is something that is done within the office. It is not done with respect to the delivery crew. This is something, a decision made within the office environment by management and so forth and so on. So therefore, our allowance for doubtful debt will fall under our admin expenses, and whether it increases or decreases, we would have to deal with that. But if the allowance for doubtful debt for the period increases, then that will be added as a part of the expenses. However, if it is reduced, then it is subtracted in our expenses. So we have the allowance for doubtful debt. We've already dealt with return inwards in our turnover. We have utilities. Deciding to write off a debt is also part of the office environment or administration task. So this is part of our admin expense, bad debts. Then we have delivery expenses. This is, as it speaks for itself, a selling and distribution expense. And we have also our insurance. So we have some insurance here, and the insurance is paid by the company. So that is also an administrative expense. So let's go back to our spreadsheet and calculate our administration expenses. So we have our spreadsheet here, and our first admin expense, as I said, we were going to look at was depreciation. And this will be the depreciation on the office machinery. So this is depreciation on office machinery. And how are we going to calculate this depreciation? The question stated, let's go back there. The question stated in the additional information, depreciation is to be charged on delivery vehicles at a rate of 5% of the cost. So that is straight line method. But it is being charged on the office machinery at 8% using the reducing balance method. So this is the method we're using for office machinery, reducing balance. Remember that if the company plan to change their method of depreciation, they should also state why they are doing it in a note to the financial statements. But remember, the principle or the concept of consistency must be applied when we are preparing these financial statements. So it is 8% on the reducing balance. And what that means when it talks about reducing balance, we are going to take the cost of the office machinery, which is $85,200, subtract the depreciation that has passed on it so far, which is $21,850, and then find 8%. So that's how we're going to calculate our depreciation. So depreciation, 85,200 minus 21,850 multiplied by 8%. So our depreciation on our office machinery is $5,068. So that's the depreciation on our office machinery. Depreciation on office machinery, $5,068. So our next expense is our office expense. So our office expenses, what did they tell us about our office expenses? We were told that the office expenses, number 2, at the end of the year, the company still owed $315 for office expenses. And if you look at the trial balance for office expenses, the trial balance tells you what happened. The trial balance is telling you exactly what they did during the year when they recorded their transactions. So at the end of the year, they would have only paid $9,800 for office expenses. So we're seeing here that the additional information states that they paid that amount, $9,800, but they still owe an additional $315. And remember, our pro concept states we have to account for that within this accounting period. So that outstanding amount is what should have been paid. So it must be accounted for in this accounting period because this office expenses was incurred to help them generate that sales revenue. So our office expenses, $9,800 plus the $315. So that's total office expenses, $10,015. Our salaries and wages as our next expenses. Next expense, salary and wages. And we were told that half of this is for the office, the other half is for the delivery crew. So our salary and wages was $31,700. That is divided by 2. So 31,700 divided by 2. So office salaries is $15,850. Let's look at our allowance for doubtful debt. So the allowance for doubtful debts, let's calculate that. And it is 8% of our receivables. So the receivables, let's see what the receivables were. I think it's 8%. Yes. No. The allowance for that is to be adjusted to 4% of the accounts receivable. So our receivables were $10,050. So that is $10,050 multiplied by 4%. Let's see what that is first. That is $402. And if we look at our allowance for doubtful debt given to us in this statement in the trial balance, the allowance for doubtful debt in the trial balance is $450. This is what they started the year with, $450. But now we calculate the allowance. Our allowance has gone down from $450 to $402. So we have a decrease in $48, which kind of signals that they're collecting more of their receivables. So that $48 is additional revenue for the company. So we will not add it as part of our expenses. What we would do with that is that we will subtract it, and so that it will be counted as revenue. So the 402 minus the 450 gives us the reduction of $48. So there's a reduction in allowance for that as $48. We have our utilities, $5,400. Double check that. Yes, our utilities, $5,400. Then we have our bad debts. We said that is also an admin expense. Our bad debts are $230. And then we have our insurance. Let's look at our insurance. The questions show us that insurance is $2,700. But the additional information states that the accountant, number 3, the accountant discovered that the company insurance was prepaid by $250. So that's for a future accounting period. So we need to remove this. So let's go to insurance. That will be $2,700 minus our $250. $2,450. So our total admin expenses are $39,065. $39,065 total admin expenses. So when we come back, we're going to look at our selling and distribution expense. So like the video, subscribe to the channel and share.